We're supposed to be careful in terms of extrapolating trends from 1 month of report. December was clearly weak. You have to acknowledge that. It's hard to dispute the weakness. But November was strong. So if you look at a trend, it shows a weakening in the trend for consumer spending, but not necessarily a collapse akin to what the December numbers showed.
In fact, this morning, some of the economists said the data is so bad it's suspect. It might be fishy, not in the tampering sense, but just because it seems like such a quick decline. Was it the government shutdown? Because more and more I wonder if households were not using credit that much, they were piling up cash. Is there, there's only a couple million people directly employed, but I've seen estimates of 13.5 million households affected by that.
So luckily, we're able to check the quality of the data in a way because we look at our own proprietary data here. We look at aggregated spend on Bank of America credit and debit cards. So what it shows first, just for the headline numbers, is similar to the government, we saw a weakening, but unlike that government data in December, we did not see as big of a decline. So to us, if you look at the trend in our data versus the government statistics, it shows softness, but not an outright collapse. The government data, that's going to be important in terms of how the shutdown impacts.
And we're showing that here. It looks like that decline is much larger than for all the others.
That's exactly right. So the shutdown played a role. And if you're a government worker and you weren't working, you weren't receiving your paycheck, you did cut down spending, and our data revealed that. But then when you look at the bigger picture, it doesn't look like it moved the needle too much on aggregate. If you look at overall DC, for example, spending there was okay.
So Brian, let me bring you in because I remember when we spoke about this back in December, when people were asking you about recession and how would you know if one was coming by looking at the companies you cover, you said back before the downturn last time, you'd start to see kind of odd reports. A company would have a bad month, or all of a sudden Saturday would be strong, but Tuesday would be weak and things like that. What are you seeing out there? Does it point towards a slowing economy, a slowing consumer, or not?
Well, look, that's exactly right. I know we talked about that, I guess, a few weeks ago now. But I would say first, I agree with my colleague there. I've spent a lot of time over the last, few weeks or so digesting a number of retail holiday reports from leading retailers. And what I saw in those reports was some indications of weakness, and particularly the high end, like a Tiffany called out the impact presumed the impact of stock market volatility, also some impact of weaker spending on the part of foreign tourists, particularly Chinese. And look, there was spotty weakness elsewhere too, but there were also some really good reports. And so I look at the result, the retail sales are reported on delayed basis today, and look, to me, there's a big disconnect between that report today and what I've heard from my retailers.
So you said last time that Home Depot, for example, in the past, and again, of course, last cycle in particular, would see trade down in their stores. Instead, they were seeing trade up. Are there other things like that happening? And are you changing any, coverage, any estimates of the companies that you follow on the back of all this?
Yeah, look, right now, I have not. So that's a great, with Home Depot, we previously made the point that what their management team has commented that in the past, in heading into slower spending or economic times, they see consumers trading down, they see choppiness by the day. As of the last communications from that company, they had absolutely not seen that. Now, to answer your question, am I seeing that elsewhere? No. Look, there was clearly an impact, on various companies of, like I said before, stock market volatility. I think the government shutdown had some impact on retail sales, either by those that were temporarily out of jobs, or maybe just the noise around that. But overall, I have not seen the type of slowing in retail sales that was suggested in today's report.
All right, so Michelle, we're left with about a 2% estimate for fourth quarter GDP. Is it going to be better this year?
Yeah, so, on the back of the consumer spending numbers, we have been tweaking our GDP forecast. Looks like we're tracking a one handle for Q4 and probably also for Q1. So even if you assume some revision, some payback into the first quarter, there's some damage done, shutdown related, confidence related. So it looks like we're going to get kind of a mid 1% growth story for the turn of the year. But that's not that different than what we've been forecasting. It's a moderation in growth. It's not a collapse. It's a moderation in growth after 2018 had almost 3% GDP growth.
Could we get back to 3% this year, or does that look unlikely to you?
That looks pretty unlikely.